Great, thanks, Haley. Welcome, everyone. So we at TBR we put out every year the predictions for the following year, and that report is available for anyone to download. This presentation is based off that special report. So let's jump right in here. We're going to be talking about three predictions. The first one is pertaining to supply-demand and the imbalances that we see and the impact that that's having and the timing of when that might get worked out. We're going to talk about hyperscalers, and we're going to talk about private cellular networks and who's the biggest purchaser of those systems. Before we jump into the predictions, we're going to set the stage on where we're at. I would characterize the 2022 as the post-pandemic era. It seems like things are going back to normal now, slowly, but definitely much quicker as we move forward in this new year. This is going to be a transition year for the telecom industry, and there's a few reasons for that. The first one is the supply chain remains problematic. So even if the pandemic is starting to subside, the ramifications, the impact that it has had will continue on for a bit longer. For the supply chain, these issues we expect to last at least through the end of this year, and on the chipset side, it's looking like it's going to bleed into next year as well. The supply chain has many layers to it. There is a lot of complexity to it. It's not just about component shortages, it's also about moving products from point A to point B. So for example, in the Port of LA, in the States, there's a backlog of shipping of barges to get in and unload the containers. That's a key problem that still is trying to get worked through, and there's no quick fix, quick solution for that. We're going to talk more about supply chain coming up, so I'm not going to spend more time right now. The second thing that is a fixture of this year is inflation. Inflation is running above trend line. We just saw the inflation print, the CPI in the States today. It was significantly higher than the expectations. That has an impact on the industry from a pricing perspective, labor, wage levels, and getting people to work, and the input costs for making infrastructure, component costs going up, energy costs are increasing. There's an impact from that. So inflation is going to be a pervasive challenge in the telecom industry this year. Hyperscalers continue to encroach the telecom industry. There are many, many examples of this. We're going to talk a little bit about the edge strategies that they're employing on the second prediction. So I'm going to move on for right now. There's pressure to accelerate digital transformation. This occurred during the pandemic, and that has not slowed now that things are starting to go back to normal. And that's significant because the COVID was a catalyst for pushing organizations to move faster with digital transformation. And that is not changing as we make this transition to this new phase of economic development. There's urgency for telcos and vendors to find new revenue and monetize 5G. As of right now, by far the biggest use case to monetize 5G is fixed wireless access. That's a multi-billion-dollar new opportunity. There's many telcos out there that are monetizing this opportunity today, and we see significant growth that's going to come from that. But if we move beyond FWA, where else is the revenue going to come from? There's an urgency for operators to get an ROI on those spectrum investments that they've made, and that remains TBD in many cases, something that is going to need to get figured out as we move into this transition phase. Lastly, and very important, is the unprecedented government stimulus that has come into the global economy. We estimate that over $30 trillion was created fiscal support over the last 2 years. That is money that was either spent during that time or money that was passed in legislation, and it will be spent over the next 5 years. It looks like 5 years out is where many of those bills wound up projecting out to. The point I want to stress here is, of that $30 trillion, we estimate about 10% of that, or $3 trillion, is allocated to the ICT industry, the ICT sector. Of that, telecom and connectivity infrastructure, those are key aspects that are receiving this government money in various countries of the world. Things for initiatives such as bridging the digital divide, increasing the speed of networks, of existing networks, satellite connectivity technology. There's various initiatives. Open RAN is another one that there is significant government stimulus funding those things. This is very important because it's supporting the market and it's encouraging infrastructure investment. It is greatly enhancing the amount of money that's being spent in the market, and we're going to show some data on that. Okay, so the first prediction is about the supply-demand imbalances, and this is impacting 5G market development. Not a lot, but enough to make it significant. In the States, there's a couple of telcos that have said that supply chain issues are creating a timing of deployment problem for C-band. And we also know in other places of the world that chipset shortages are impacting deployment schedules and device availability and things such of that nature. So there is definitely an impact. It's not as significant as maybe in the car industry, where we see car manufacturers are really bearing the brunt of this, but it is significant enough that it could delay timing of some key infrastructure build-outs. We do expect the demand environment to remain very robust through at least this year. And if you look at the timing of some of the government expenditure, we could comfortably say over the next 3, even 4 years out, we're going to see a significant increase in market development for these technologies as it pertains to the telecom industry. Demand is going to outstrip supply through at least the end of this year is our timing. And it's looking like at least through middle of 2023, as we start to look at the earnings transcripts from the recent rounds of company earnings, it's looking like that marker line is getting pushed out a little bit more based on what executives are saying. So I want to show some data. This is the global 5G CapEx spend by CSPs. This includes RAN, it includes mobile core, and it includes the product attached services to those technologies. The blue line is the long run historical average. It's basically the average over the last 10 to 15 years, how much the industry spends globally on that infrastructure. And it's about $50 billion a year. That includes all the radio generations, right? We took a blended average and we added it all up. The point I want to stress here is that this year, we're going to break above trend line. This is very significant, and that is just for 5G. That does not even include the 3G and 2G and 4G spend that is still out there in various parts of the world. So basically what we're saying is that because of the unprecedented government stimulus and the urgency by telcos to monetize investments that they've made on the spectrum side, we're going to see a surge in spend on 5G infrastructure. This is already happening. There are tangible examples of this. If you look at the states, the guidance of the big 3 telcos, all 3 of them have upped their guidance for CapEx, all of them, and by billions. Like it's a significant amount that they increased it, and a large portion of that is pertaining to 5G infrastructure deployment, not just C-band for the states. It's broader than that. There's millimeter wave investment, and there's other bands as well. And then you have in other parts of the world, there's certain countries that are making 5G a priority, and spending a significant amount of money to build out that infrastructure nationwide. The second prediction is the hyperscalers. So one of the things that TVR tracks very closely is hyperscalers and how they're coming into the telecom market. One of the things that we're predicting for this year is we're going to see a significant shift in CapEx from central cloud to edge cloud. And we have some data we're going to show in a bit. The driver is creating value from the convergence of distributed computing and intelligent connectivity. So we talk about all these new use cases that 5G, edge computing, and AI are going to enable, things like autonomous driving, drone delivery, these types of things. Those types of use cases require low latency and dense connectivity, intelligent connectivity. And what we're seeing is the hyperscalers are basically investing in all aspects of the technology stack, and they're building out footprints to go after those opportunities. We're expecting the hyperscalers to be like the de facto owners of a large portion of edge infrastructure. And that is not a profound statement to make if you consider historically, if you look at what happened in central cloud, how that market wound up evolving since AWS was from 2006 on. We saw the evolution of the hyperscalers becoming the largest players by a wide margin in that market. And basically what we're saying is the edge is an extension of the central cloud, and it's a more seamless segue for those existing players to become dominant in this new category. So I want to show this a little differently. The hyperscalers are moving to the convergence of distributed computing and intelligent connectivity. We talked about the new use cases. There's many. We estimate that there is going to be trillions of dollars in new economic value enabled by 5G, edge computing, AI, and a few other key new technologies. That amount of value is what the hyperscalers are fixated on, because that's going to help them to move into this next phase of their growth and their market development. It's also going to help them sustain their valuations. Distributed computing, the hyperscalers already have well built out. They have everything from the on-device computing. Think about a MacBook, which has, you're doing compute on the device. On-premise computing could be in-home Wi-Fi, mesh Wi-Fi, network that is, there could be some compute in the stack that's enabling that. If you think about edge computing and central cloud, those are already covered in a large extent by the hyperscalers. So basically weaving those different domains together into a distributed computing platform where workloads are autonomously orchestrated across the different layers, wherever that workload it's best able to get executed. So depending on the characteristics of the workload, where would you execute that in the network topology? The hyperscalers are focused on building that fabric and then integrating that with the intelligent connectivity side. We talked about mesh just before, but it's much broader than that. It's about the mobile core, the RCS, those platforms, the management orchestration, the platforms that will integrate the connectivity, the network, if you will, with the data centers or the cloud, if you will, to build the enablers of those new use cases. So showing some data here, the shift has already been underway. In this data includes 9 companies. This is, it says it in the note there, Alibaba, Alphabet, Amazon, Apple, Baidu, Facebook, Microsoft, Rakuten, and Tencent. So there's 9 companies that we basically added up our estimates for how much they're spending on cloud. And then we parsed it by central cloud and edge cloud. Central cloud includes the mega data centers and regional data centers. And edge cloud includes metro data centers, localized data centers. Think about base of cell tower or ag hubs, things like that, wavelength type of an implementation. And then it also includes on-prem, so like an outpost, where it's an on-prem implementation of the hyperscalers cloud. And that's how we parsed for the data. And as you can see here, there's a shift from central cloud to edge cloud over the next few years. Again, very much driven by the need to support these new use cases, this significant value that's going to be created from these new technologies. So lastly here is how much are verticals spending on private networks, private cellular networks in particular. This is another market that TBR covers quite extensively. There is significant belief in the industry that the manufacturing vertical is the largest opportunity for private networks. Our research suggests that is not true. Our research suggests that it is the public sector that is the largest opportunity, and that includes Fed, SLED, it includes first responder, public safety. Those are the types of, it also includes defense, things like that. If you add those up, those different subcomponents of that vertical, the spend amount is very significant. We're going to show some data in a minute. Government entities, and again, that includes all of those categories I just mentioned, they're going to be leveraging 5G for a broad range of use cases. And we expect government spending on 5G is going to become a key growth source for CSPs and vendors. So I want to show some data here. What we have here is the breakout of private 5G network spend by vertical. And we have all the major verticals here. So manufacturing, transport and logistics, natural resources, government, and other verticals. And if we break that out, if we look at just the government portion, this is just 5G. This does not include LTE. If we look at just the private 5G portion, we're expecting that the government vertical globally is going to spend about $3 billion on private cellular networks by the middle of this decade. That's a significant number. If you think about the size of the total private network opportunity, this $3 billion is actually quite a significant opportunity for vendors to address, as well as for CSPs. And it's also growing quite fast. These notes here just say what's included. So we mentioned before, this is national, state, and local government spend on civilian, public safety, first responder, and then you have your military and defense type use cases as well for 5G technology. And again, this includes education and smart city as well, where the government is buying the infrastructure that would be included in the market size here. Okay, so I just want to make it known that when you get these slides, if you want the full report with the rest of the information from the predictions document, the link is on this slide on the bottom right. And then on the left-hand side, for those of you on the phone who subscribe to TBR's research, those are the reports that I pulled data from. If you want to get more information, you can go to those reports and you can get a bigger data pool and all of the commentary that's associated with it. And with that, we'll open it up for Q&A. So I see there's some questions already in the queue. As Haley said before, if you want to ask a question, there's a button at the bottom of your screen that says Q&A, and then you can type it in when the prompt comes up. So I'm going to go through the questions that came in so far. Just bear with me a sec. So the first question is, how are the hyperscalers differentiating in the traditional telco market? How about defensive differentiating moves by the traditional telcos to address this new competition, especially in the US? So the hyperscalers are differentiating in several ways. They're coming at this from a data monetization standpoint. And what I mean by that is helping enterprises unlock the value of the data that they have, capture the data, synthesize the data, and then leverage that data for outcomes. This is like one of the biggest differentiators that the hyperscalers bring to the table. So for example, they have AI and ML platforms that they bring into these engagements, that they can bring into the engagements. Not all of them have this, but where the enterprise would run the data through those algorithms, and then it would help them optimize their cost structure or help them to generate revenue. And this is a big differentiator because the telcos are primarily just selling the solution. They might be managing some of the operations of that infrastructure and providing some value-added services, but for the most part, we do not see them moving higher in the value chain to provide that level of data insight and outcome-based solution. So that's the big one, and maybe I'll leave it with that. That's of all the reasons, that would, I would say, be the biggest, most important reason for that. The next question is, are telcos driving an increase in infrastructure spend as a result of online gaming for 5G? And how is the server infrastructure market being affected by the rise in online gaming? So the server market's doing quite well for not just gaming, but other use cases as well. Server numbers, they seem to be very strong, especially depending on the vendor. Some vendors are a little challenged right now, while others are taking share and growing, continuing to grow quite well. There's also some key use cases that are driving server adoption in the telecom space in particular, as the industry moves towards Open RAN and virtual RAN, especially virtual RAN, where you're virtualizing the software stack that runs the radio layer. That virtualized software operates out of servers, right, closer to the edge of the network. So if you think about companies like Dish Network that's building out a greenfield disruptive network, if you think about some of the C-band deployments that might be using virtual RAN aspects, you can see some drivers for investment in the servers for that network build out. Online gaming, I think when we start to think about the metaverse, once this becomes real, which I think is going to be the second half of this decade, we're going to start to see this concept of the metaverse really become commercialized and start to scale, I would say, towards the end of this decade. There's going to be a tremendous need for servers, and gaming is going to be one of the predominant use cases of the metaverse, at least initially. So I would say that the demand environment for servers is going to remain robust. All right, the next question is, are the services in the CapEx spend chart referring to professional network services they're purchasing from IT providers or the services they're delivering to customers? So thanks for that question. It includes the services that CSPs buy from vendors for the infrastructure. So for example, that includes capitalized services such as deployment, so the install of the infrastructure, the integration, some integration services are capitalized. A small portion of maintenance services is capitalized. And there's some other aspects of professional services that will be capitalized in a network build, such as plan design. Those types of services are also included in the market size that we showed, if they're capitalized. There is more spend if you include the OpEx side of the equation, where some services are not, would not fall under the capitalization banner. The next question is there a breakdown of spend or any insights on which professional services CSPs are buying or demand for these services? So again, it's a mix of services that we are looking at. For professional services, it's the full range, right? Everything from front-end consult, plan design, These 5G networks are very complex, right? You're starting to talk about carrier aggregation, bonding different bands together. You're talking about millimeter wave, which presents propagation characteristic challenges that need to get worked through to optimize the performance of the network. These are things associated with 5G that require a significant amount of professional services. So yeah, all of these types of services are important. And then I'll go a little further than that. From an integration standpoint, there's all kinds of integration required here because, and let me unpack this in a few different ways. You have Open RAN coming in, Open and Virtual RAN coming into the equation. That requires a significant amount of integration services right there. Then you have the mobile core, which is evolving quite significantly to a cloud-native standalone architecture, fully cloud-native, containerized, fully virtualized. That has integration needs as well in the software stack. And then you have the application layer where there's new services coming in which are very complex. Some of these have very complicated revenue share models associated with them. As an example, significant software production and integration that's associated with building out these aspects of the network. So yeah, professional services across the board, significant demand for pertaining to 5G. The next question is, will urgency to find new 5G revenue translate into network slice-based services and machine-type communication? So from my perspective, network slicing isn't real yet. It's very primitive. It's still very manual intensive to make it work. And the core is not ready yet to support it. So what I mean by that is the vast majority of telcos in the world are not using a 5G SA core. They're using a bridged core on like a stepping stone to the standalone core, bridging from a virtual EPC to a 5G core, kind of like a dual core type of implementation, where it's a bridge between the traditional architecture and the new architecture. You can, I guess, do network slicing, but it's not efficient, it's not optimized, and it's not going to yield the type of autonomous operation that the telcos want. This really needs to become a fully evolved core that is able to support that type of performance for the network. So I think it's a timing thing. I think we're still maybe a year or two away from seeing true network slicing deployed in a commercial way. Ultimately, I think it will come to fruition, and it's going to be very much, towards the end of the digital transformation journey when the network is actually able to support that type of a very complex approach towards the core. Okay. I think that was all the questions. Any other questions? So again, if you want to ask a question, you can put it in the Q&A box at the bottom. There's a button, it says Q&A. Click on that and a prompt will come up, and you can put your question in there. All right, great. So Haley, I think we're all set.
All right, thanks, Chris, and thank you everyone for joining us. Please feel free to reach out to Chris with any follow-up questions. His email's on the screen now. If you have a few moments, it would be greatly appreciated if you could fill out the survey that's going to pop up on your screen. That helps us create better webinars for you in the future. A replay version of the webcast will be available after the event and will be sent out to you via email. To view a list of our upcoming and past webinars, please visit tbri.com. Be sure to join us next Thursday, February 17th for 2022 Predictions Data Center. If you want to join us, you can register by clicking the button on your screen now. Thank you all and have a great rest of your day.